Good afternoon, everybody. Microphone check, screen check. Looks like everything is working correctly here. Good. Good afternoon. All right. Perfect. So, as always, we're going to be going through some of the charts and markets, just kind of taking a look at everything that is that's going on. You know, we want to see what kind of markets are moving, what kind of moves to expect, etc. So, give me a second here. All right. Perfect. So, first of all, the primary markets that we always take a look at are going to be the euro, gold, crude, and the S&P. Now, during that time, if we're going through anything that you want to, if you want me to take a look at for you, whether it's, I had someone mention the grains before, feel free, type them in, we'll take a look. Stocks, crypto, I mean, you name it, we'll take a look at it once we get through our primary ones. So, second here. Now, you're going to have to bear with me. This is the first YouTube live stream I've had to do before, so it might be a little bit shaky, but we'll make our way through it. So we'll do our normal spiel, and then we'll get right into the chart. So if this is your first time checking this out, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From here, you're going to be able to register for our email newsletter list to be notified every time one of these videos comes out. Along with that, in the email, it's going to cover a bunch of things that we don't have time to talk about in this session. Whether it's crypto, futures, stocks, you name it, it'll show up in there at some point. So make sure to sign up for that if you haven't done so already. Also, go over here and click on the live trade room subscription and trial info, where you can sign up for a free 3-day trial in the live trade room. You can hang out with us for a couple days in the room and see what we're all about. It's a really great way to kind of hang out with us, ask some questions, and see how we approach the markets every day. So make sure to sign up if you haven't done that already. Now, right off the bat, first of all, jumping into the euro. The euro, for the most part, has a little bit of a balance issue, I guess is the best way to put it. You know, I mean, we're looking through the markets here, and we have a nice bear wedge working its way across. And, I mean, to be fair, the bear wedge has been going on for a decent amount of time. The top was put in back in mid-February, and the bottom wasn't put in until like the beginning of March. So it certainly is not an old wedge. But the problem that we're running into right now is that we're running into the lows as support. It held really nicely, but when it came time to actually follow through and break out to the upside, the buyers were gone. They never showed up to the party. So with that lack of conviction to the upside, we end up showing what appears to be more of a trap. They push up, they go into the moving average resistance, kind of a cluster of moving averages there, and then end up pushing back down with an aggressive punch. I mean, that's a decent amount of bear pressure, and that is a beautiful bear bar to get a move to the downside started. So the one thing that really kind of stands out to me is that obviously the sellers are interested. Now, they may only be interested for a little bit, maybe to a quick new low like we just had a second ago, and that might be it, right? That might be all that the sellers were looking for. But that said, the overall downward pressure still looks really good, and it doesn't appear as though traders are necessarily done pushing. Right? Not with that amount of bear pressure. Now, the one thing that does stand out, you'll see this red box here. This red box is kind of you can think of it as sort of a gap. We had this little swing low that was put in. They slammed lower, and you'll notice how the market just kind of broke away from that low. And when they tried to come back, they failed. It never really popped higher. They failed again and starting to drive lower, and that creates somewhat of a gapping area. It's kind of like an open distance inside the market that has to fill in at some point. Now, at some point, that could be a week from now, it could be tomorrow. It all kind of depends on what the market perspective really is. But for the most part, the sellers obviously, they're definitely in tune with the sell side. So really what I'm looking for here is continuation lower. I want to see the sellers shove down and break through the lows of this wedge, because the next area of support that we have is down at 23,270. What would really make a good impact, not just the sellers kind of driving the market down, but if we can look for some form of an AB equals CD type of move. So if we go in and we draw up a channel, I forgot my Control-Shift-2. Yeah, Control-Shift-2. We go from the top down to the lows of this little bounce and then pop that up on the highs. This is the ABCD move, right? From top to bottom, space a little bit, and then the next move down. You'll notice the reason why I like that so much is because not only does it give us an obvious objective to the downside, it breaks down to a new low. A lot of traders love looking for those new low pushes, but it also pushes down, and look where it ends, right on top of the bottom of that low side of the channel. Now that channel is coming from back here, from here to here, and that is exactly where the ABCD ends. So long-term objectives, I mean, we have some decent downward pressure, and we have a lot of room for the market to work out lower. Now, we do have some support at 23,270, so that's, you know, there is definitely a little bit of something we have to keep our eyes on there with that support at 270. We also have support at 725. So there are a couple levels of support that might be in the way of the market to, you know, kind of get that big, quick drive down like we had back here, like we had back here. But for the most part, it still is creating a nice drop lower, or at least the potential of a drop lower for that continuation down. Now, at the very least, looking from the top of that move to the peak where they created a little bit of a that little bounce area where we have that zone kind of bracketed off, you'll notice a 100% deviation down from that top to top measurement is right there on top of 4-hour support. So this is creating a little bit of a zone for us, right? We have a couple things that we can take a look at. We have the AB equals CD correction to the downside. We also have on top of that the one-to-one move filling in that gap, and that's all stacking up on top of 4-hour support, which is back here a little ways. So and that's coming from that big old leg to the upside. So everything stacking up in the same place creates kind of a zone of interest all inside of here that the sellers are going to be looking at a target for. So I'm looking for the sellers to that drives downside so we can fill in some of that momentum lower. Let me clean this up a little bit so we don't get any confusion. Get rid of these. Get rid of those. So looking for a downside objective to fill in, I mean, at the very least, right around that 745, maybe even a little bit lower to the lows of that ABCD. So the Euro's looking pretty good there. We dropped this out of the way. Let's take a look at gold. Now, gold has caught a very nice rally today. Certainly no joke to the upside. The amount of buyers that are kicking on gold today are about the equal amount of sellers that are smashing down on the S&P. We've actually had some pretty good movement today. Plenty of trading opportunities as well. So definitely not going to be upset. But with this amount of rallying to the upside, it's really hard to ignore the fact that these candles are getting bigger and bigger on the way up. And that isn't necessarily healthy. When you're looking at it and kind of considering a healthy trend, a healthy trend would be nice, consistent bars in uniform, right? I mean, right here's an example. We had a big bear bar, you know, pretty decent kind of equalized size of that candle. Then it had a big blow-off bar, but then it followed up with another big blow-off bar. There's a good amount of consistency there. Look at over here. We have a big bull bar, a really tiny one, and then it starts kind of picking up speed, but they're all around the same size. It's a pretty good average of size. But here, we're seeing something a little bit different. We have a small bull bar to start the move off, and it got a little bigger, then it's getting a little bigger. You can kind of feel that crescendo coming, right? It's almost a type of exhaustion when the market's just pushing so hard that it runs out of steam. You end up getting in a situation that, you know, for the most part, it's got to take a break. Now, is it going to take a break right now? Maybe not. You know, that part's hard to tell. We don't have resistance until up at 1350.3. And in fact, with such a strong rally to the upside, I kind of want to keep an eye on where all of that bullishness started, and that's going to give us a level of support at 33.3. So we've got a lot of interest to the upside here. The buyers are definitely not joking around that much. Is pretty apparent. But you know, the other thing that kind of stands out here, along with the fact that obviously buyers are in charge, is the fact that they came down to that previous swing low, tried to push under, failed, tried to push under again, failed. It's kind of like a double press outside of the channel. We talk about that every once in a while. And this time around, well, it's the exact same thing. You're anticipating a strong reaction move, and that is what's happening. Now, arguably gold has been a little bit of a descending channel-esque kind of move. But also you just say, hey, this is just a big range. It wouldn't be that hard to mark up a range high inside of here and a range low right inside of there. And you can see the amount of support that comes off of those areas is obvious, right? So knowing that, with the bullish objective being at least towards the top of the range, we don't have a lot of room to go. So a lot of this bullishness It's already done. The buyers kind of completed that move to the upside already. So really, what I would rather see going into the going into the afternoon session, going into the evening session, tonight would be really nice to see a pullback, whether it's one candle, a couple candles, something like that. As long as the pullback is small, I don't want a really huge pullback. Just want a little tiny one, kind of like we had here, or like we had here. That's the kind of movement that I want to see, because then what that allows us to do is get aggressive, jump into the buy side, push the market up for further movement, and that way we kind of complete that resistance area at 50.3. So my overnight plan really is just kind of waiting until we get some form of pullback. We might get a pullback in the next 4-hour bar after this one closes in the next 45 minutes or so. We might get a pullback tomorrow at 9 o'clock. It's really hard to say when something like that is going to happen. That's what I'm waiting for right now on gold. It's simply just a pullback that we jump into to push the market back up. Now jumping over to crude oil. Crude oil has caught a little bit of some sell-side movement today. We have a decent amount of sellers coming in. The bear pressure is down. I mean, the sellers haven't really been playing around since we opened up. And we can see that just portrayed by this big old drop to the downside. Now, one thing, of course, that stands out is the possibility of a push wedge bottom, and it also does look pretty close to the top here. But if we mark up A to B and we can find the C point, right now, I mean, granted, there's 45 minutes left on the candle. There's a chance that they close back above this level. And if we close back above it, then it would be a pretty good sign of support. But at the moment, while we had support at 63.62, but it didn't do a whole lot. We're coming down to moving average support, and the next area of support isn't until 62.62. So we're kind of in this limbo zone where something has to happen. Whether it's a bounce back up and a failed close underneath 63.62, or maybe it's a complete failure and it blows all the way down to that support at 62.62. One way or another, though, sellers are very likely going to attempt to continue this move down. It's really hard to look at a move like this and think, oh man, we had this giant move. Why wouldn't they have another leg to that? It's very common. Whenever you have a big parabolic move in one direction or another, the market tends to want to follow it up with another one. So in this case, it's what I'm looking for in crude oil. Even though we are running into support, we have a couple other levels of support. Moving average support is the 200-period moving average. And we have support below us. It's still really likely that sellers are going to try to get one more push. Now, this is one of those scenarios where it looks a little bit more kind of not necessarily likely, but just more common sense, I guess would be the best way to put it. And that low test isn't going to be very strong. I'm looking for something like this. This looks pretty good. Where we have that strong push down, backs up a little bit, pokes its way back down, bounces off that low, and comes back up. That's more along the lines of what I'm looking for here on this bearish move for crude. It just makes a little bit more sense, and it does kind of fit the bill. We are coming in with a slightly more aggressive wedge top. That could end up being some form of a channel. If we kind of copy paste that downside is fitting at the moment. Keep in mind, the candle still has about 43 minutes left. So we have to keep that in mind. For the most part, bears don't look like they're doing too bad. And I'm looking for continuation downside on this, whether it's a small correction or maybe a correction back to retest the previous low. Kind of breakout, pullback with movement to the downside. The anticipation is that wherever this low gets put in, the market retests it, probably weak, and then bounces back. So that's on crude, and then the S&P. Oh man, the S&P is just getting smacked today. All of the bears to the downside really showing up heavily here. The bear channel that we had earlier isn't really doing a whole lot anymore. We might be able to keep this top on, but for the most part, it's not helping, right? So if we go back a little bit of time and say maybe we can find some form of refresh wedge, something else to work with, because the market's certainly going to give us anything. We can go with like A, B to C, looking for that C test down here. That does look okay. The other levels of support, the rising levels of support, obviously this one we've kind of blown through here. But the next one is that really kind of shallow level of support, not too far away. And it wouldn't be that bad to see a little bit more continuation downside. Maybe they can start kind of getting those areas hit. Sorry, just noticed my microphone's coming in a little hot. Bump this down a little bit here. There we go. So that's really what I'm looking for in the S&P is more continuation to the downside. I mean, you don't get this kind of bear breakout without seeing some follow-through. But you also have to keep in mind that put yourself in the shoes of a trader who's short, right? Sellers who sold into this resistance or sold the retest of the trap high, something like that. They've been short for a while. They see a big old bear bar like that. They might be thinking, hey, Christmas time, take off some cash and call it a day, because that might be able to give them some halfway decent profitability, kind of like a gift from the markets, if you will. So with this bear move down, would not be a surprise at all to see one candle bounce at the very least, with sellers taking profit. And a lot of times when you get that kind of move down, you end up with a situation where you get that big hammer to the downside, it pauses for a second, and you'll see, out of a 4-hour bar, 3 of those hours, or 3.5 of those hours, have been spent kind of rattling around, people taking profit, trying to sell it down, taking profit, selling it down, profit, selling down. And then at the final 30 minutes, 15 minutes, all of a sudden the bottom drops out, goes absolutely bonkers. That could be a scenario to keep your eyes on as well. So at the moment, it looks like we might be in a situation wherever this candle closes, especially because of how big it is, I'm anticipating a little bit of profit taking on that push up. Makes sense. If you were a seller from, heck, even if you were a seller at the top of this, or sold even inside of here, wherever this candle closes, you're probably going to be taking profit. So I'm anticipating a bounce, like I said, out of a 4-hour bar, three and a half hours bouncing around with people taking profit before it actually starts letting loose. So something to keep in mind. But in terms of support, we have broken through a lot of stuff here, and a lot of things are out of the way. So support at 25.95 is gone. The retest of that mid-trap at 25.93 is gone. You're talking about that today in the room, where if the buyers are going to try to find a reversal area, they want to break below that 25.93, but they do not want to see this low given up. Low was broken. So that objective area is gone. Not hold that. So looking for the next area support a little bit further down, 25, 26, 75. Area. Interest. And one of the things to consider as well, you'll notice right here, this bull bar that kind of broke the mold. We had that range, got stuck there for a little while, and then it kind of rocket ships out of there. A lot of times you use that candle or those sequence of candles as a measurement to try to find an area of support. So here we can look at this and say, okay, well, from the top of this move to the bottom of that bull breakout candle, that could be a projection to the downside. That might give us some form of support, especially that lines up with some. So if you get rid of some of these extras here, we can see. Guess what? That projection to the downside lines up almost perfectly with 4 hours support. That 4 hour support being that monstrous leg to the upside. After that attempt to breakout failure, they broke out to the downside, failed. We're starting to see the buyers pick up again. And lining up in that exact same spot, very likely buyers want to defend this. So that is something we have to pay attention to going into maybe this evening. We might hit it a little bit later today or going into tomorrow's session. Either way, looking for the seller to continue and drive this market down to finish off the objective at 275 down to 61. That kind of 1 to 2 point zone is where a lot of those areas of confluence sort of line. So that's going to be what I'm looking for on the S&P. Now, for the news for tomorrow, we do have a couple things to keep our eyes on. First of all, we swing on over to investing.com. Tomorrow's news. Now today, just as a side note, if you were wondering why today started off a little slower, or some of your news didn't work, this would be why. It's Australian, United Kingdom, and German Easter Monday. So it's a little bit of a holiday today. A lot of markets closed still. A lot of participants. Honestly, wasn't that bad. I think today's price action is pretty good. But going into tomorrow, or kind of tonight at 12:30 out of Australia, the RBA interest rate decisions coming out, and those are some pretty big announcements. They're definitely not small. So if you're trading the Australian session, whether you're trading the Aussie dollar or maybe you live in Australia and want to trade the stock market, you got to be a little bit careful going into tonight, at least tonight Eastern time. So looking at the RBA interest rate decisions, something to keep in mind. Give an echo. It's really hard to understand. Let's. Oh, hang on. Click. Microphone aux. Hang on. It's that one. Okay. Is that better? Testing. There is a little bit of a delay, mind you, so by the time you type it in, it might be a little bit later. But I didn't realize the webcam was picking up audio as well. I was wondering why there were two different audio bars moving, but like I said, it's my first time doing the YouTube stream, so I apologize for the double audio there. I'll have to watch it back and see if it's usable or not. But I mean, that should have fixed it. I'm only seeing one audio bar move, so. Now it's perfect? Okay, awesome. Thank you. Thank you, thank you. So, I mean, looking at the news for tonight, you know, the RBA interest rate decisions and the rate statements coming out of Australia at midnight 30, at 12:30 tonight, Eastern time. At 3:55 out of Germany, we have the manufacturing PMI for March forecasted at 58.4. Out of the UK at 4:30, we have the manufacturing PMI for March, 54.7 is the forecast there. And then once again, out of Australia, 21:30, the retail sales for February going on, forecast at 0.3%. You'll notice a little bit of a problem there. There is no U.S. news. So, you know, the big thing that we really want to see is something that can potentially get the markets moving. Unfortunately, well, we're in a situation where, once again, we're coming not only off the backs of an extended holiday, everybody's waking up, you know, half awake today, coming into the office late, etc. I mean, it's always that way after a long holiday. Then we go into Monday, there's not really any news. Okay, not a big deal. But now Tuesday, that's another day with no news. So we're getting into a situation now where the markets are purely moving on fundamentals and technicals. That's it, because nothing else is happening in the U.S. session. I don't mind it that way as long as the market's moving, but, you know, it is something that we need to be a little bit careful of because there is no news. So we had a request to go over some of the agriculture markets. So the ags are probably some of my favorites, honestly. We've been trading a lot lately, the agriculture markets in the afternoon session. And in fact, if we look over on good old Thinkorswim here on soybeans last night, we had a setup that we were talking about in our chat room as well that worked out really, really nicely. And this seems to be kind of the case lately where we're getting this, you know, 8 o'clock hits. It's when it opens in Eastern time again for the afternoon session versus some of the other markets. If you're unfamiliar with the ags, some of the other markets open up at 6 o'clock. The agriculture markets open up at 8. So when we're getting that 8 o'clock open, we're actually getting some really good movement. You know, it hasn't been bad at all. So, you know, the agriculture markets, nice bullish breakout to the upside. It continued into the afternoon session, or evening session in this case, and we had a good rally to the upside. Now, the rest of the day was spent pulling back, so there really isn't that great of movement afterward, right? We had that big rally. They opened up at 8 o'clock. The thing went off to the moon. And then it took some notes from Bitcoin after hitting the moon and pulling all the way back down, and now we're back at the landing pad. We're having a little bit of a hard time. Now, this is just a faster time frame, but that's kind of the way that today looked. Now, if we look at a bigger time frame, you know, zooming out? I guess that kind of makes sense. Zooming out to something like a 4-hour chart as an example, a little bit of a different scenario, because then we're dealing with a situation that's, well, I mean, we'll see in a second. So let me open up a new dialogue here. Soybeans, I believe, is on the 518. So that's one thing with Thinkorswim that's pretty nice. You just type in ZS and it does all the hard work for you. But we'll load up the default template, pop that open here, and we'll see pretty quickly that soybeans is having a little bit of a, well, obviously a big rally up, and now they're pulling back inside of that. So let me get rid of some of this. I think I loaded the wrong template. Anchor. Let me get my glasses on really quick. Wait a minute. Default minute. Default. What happened to my anchor? Oh, there it is. I'm just blind. Got it. All right. So one of the big things that we're dealing with here on soybeans is not just a ridiculously strong rally up, but that's coming off the backs of multiple failures on the bottom. We had a failure here, really didn't get anywhere before bouncing back. We had another failure here, didn't get anywhere before bouncing back. Once again here, they really had a decent breakout to the downside, but then came all the way back up again, and we actually trapped a high. So there's a lot of back and forth, and this happens very commonly with markets in general, not just the agriculture markets, but in general. You get a lot of this back and forth before it starts making up its mind. Now, in this case, we had this lift here on some of the grain news, but with that grain report shoving the market so aggressively higher, buyers are going to be wanting to pick up a pullback. But they need to find an area that makes sense. You don't just want to go jumping in and saying, oh, yeah, you know, hey, it's a 50% pullback or whatever the case may be. You know, just because it's a 50% pullback that's not necessarily good enough. You want to make sure to line stuff up so that it makes sense. And if we're looking backward here and we're marking up some of these other levels of support, we can see that one looks all right, that one looks all right, that one looks all right. And then we want to start kind of stacking up things that make sense, that things that line up together. They give us levels of support or resistance that we can work with that kind of culminate with one another. You know, a channel low and support, a Fibonacci level on top of 2 other levels of support, that kind of stuff. And this is one of those examples where, you know, this previous swing low, it was okay, but it certainly wasn't perfect. You know, it would have looked a little bit better like there. You know, looking at the low open or even the low closes, this offers up something that looks a heck of a lot better. Notice the difference in the way that this looks now? Instead of just parking it on the low, here we have the low close. They retested it again. When it came back, it held it as resistance and support. It stalled off a candle there, held as resistance here, held as resistance here, it closed there, opened there, and held as resistance again. Now we're building a case, right? There's something here. That's the kind of support that we want to find. These other ones, they're just not that great. You know, I'm sure that the market, if it does end up going back down to the lows, will find a boatload of support at 1,015.25. But that's the kind of stuff that we want to find. We want to find these levels stacking up on one another. In this case, not only do we have support and resistance at 36.75, but if we mark this whole rally up, notice what lines up pretty well with it? It's at 50%. We have a 50% pullback that's stacking up almost directly on top of that level, and that is definitely something that we want to keep our eyes on as well. So now we're starting to build a case for support. So we have a support level coming in at 36.75. We have the 50% fib at 34. We'll round up and say 35, all in that same area. Is there anything else that might stack up? Well, kind of, sort of. I mean, if we go back for a channel high and kind of park this down in a channel low, you know, it doesn't give us anything to work with over here, but it does give us a little bit of a channel. You know, there's not really much else that kind of lines up nicely with that area. And if anything, I would almost prefer to widen this out a little bit. So, you know, this is definitely an area of interest. One little caveat, though, I always like kind of figuring out where a reversal took place, how far it went, why did it stop where it stopped, right? Why did the market turn around there instead of, you know, at 65 or 53 3/4, right? These are the things that you want to kind of find out. And if we look at this rally to the upside, the pre-rally move, this downward move that failed a new low, we can measure from that low point back to the previous swing high and try to find any type of correlation that may be setting in. And if we look at this move, we can see, if we get rid of some of this extra crap that we don't need here, a lot of times the market will turn around at a 61.8 or a full 100%. And guess what? We are stacked up on top of a 61.8. Okay, now we're starting to develop a reason why the market pulled off of those highs. But again, like we just talked about, that's not alone good enough. We want a little bit more than that. So you have a 61.8 that lines up, but let's go backward a little bit and say, well, you know, without loading up enough days here, let me see if I can load a little more. Let's load 90 days. Should be all right. Yeah. 90 days will be all right. So we go backward a little bit here. We can see if we draw a line back and see if anything lines up. Well, guess what? It lines up pretty well. You know, we have a level of resistance. We have resistance, support. It looks pretty solid. So, you know, it's not a surprise to find some resistance there at 57.5, you know, 57 in that area. Now we're starting to pull back a little bit. And one thing that really can happen sometimes when you have that 61.8 hold and it starts driving back, there is always the argument that, well, it held a big reversal area, a 61.8 off of the bear move down and a kind of an inverse measurement. A lot of times when that happens, you'll see the market go all the way back down to a new low. So the support between 36.75 down to 34-ish, it really needs to hold. There's got to be a ridiculous amount of strength there, because if that starts breaking, this could easily run all the way back down again, and this whole bull move would have been for nothing. So that is something that I want to kind of keep an eye on here. Selling is holding true off of 57.5 to 57. Next level of support's at 36.75 to 35-ish, depending on how you want to round. If that breaks, we might be bombs away all the way down to the low test of that big bull rally, and that is going to be the next major level of support at 15.25. So those are kind of the areas that I'm looking for right now. Looking for a bounce bullishly off of the 36.75 to 34, 35, that area. Looking for a bull bounce, maybe back to 50s. 1050, and then from there it really needs to make up its mind. If it's going to rally, it needs to break through 1050 and really go ripping, or it runs into a little bit of a problem and we start crashing back down to 15.25. Worst case, you're probably going to be able to find at least a little bit of scalping opportunity on a faster time frame around 36.75, but you know, on the 4-hour chart might have a little bit of a hard time. One of my other favorite markets when it comes to the ags is a little bit of a kind of a different one, Soybean Meal. I'm a huge fan of Soybean Meal. Now again, on Thinkorswim, it fills in the date for me. I want to say it's 5/18 as well. Yeah. Okay. So Soybean Meal is another one. Now, if you're not very familiar with Soybean Meal, it's probably one of my favorites outside of the big ones like corn and soybeans and all of those. And the reason is because it's easy to read, right? It doesn't tick in quarters or any of that other stuff. It ticks like gold. It ticks in 10-cent increments, and each 10-cent increment is $10. So it makes it a lot easier to kind of keep up with instead of trying to look at something like soybean oil that ticks in 0.025 increment. You're like, what? What is that? What am I looking at? This is a little bit easier to kind of keep track of. Another one that had a really strong bull rally to the upside, but this isn't the first one. This is the second one. Very strong rally up, big rally up, deep correction in that move higher. From the low to the high, that pulled back easily 70-80% before rallying back up to a new high, makes a new high, and fails right back over. Now, that could be due to the fact that we're dealing with a 3-push wedge top, something like this. It's holding really well. I can't ignore it. But at the same time, well, it might be the same situation as soybeans. Soybeans might be kind of dragging Soybean Meal, down with it, where it's having a hard time sticking to those highs. The sellers are really pounding it down, both buyers taking profit and sellers initiating new positions. And we're kind of dealing with a situation that with Soybean Meal, it even lines up with the 3-push wedge top. So there is definitely a little bit of a case for the bears, and, makes it a little bit tough for sure. But Soybean Meal is another great market to keep your eyes on if you're looking for a level of decent movement. It's not it's not like gold or anything, but it's a pretty solid market. Get a couple trades on Soybean Meal. But that's kind of what I'm looking at. I see these kinds of moves and we're holding the highs, but whenever I'm looking at these types of analysis, I always want to look at both sides of the coin. The buyers, sure, they have a really good argument when it's cheap, but when it starts going up, all of a sudden all the buyers disappear. Where'd they go? So buyers just lost interest, and they don't have interest until it starts pulling back really deep again. We saw that since the low, right? If we measure up this low to high, it pulled back basically 80%. We go to the next one, it's the same situation. From this low to the breakout high, it pulled back probably about 70%. And now we're probably looking at a very similar situation here. We have a low put in and a high. It's holding 50% right now, but does it make any sense for it to bounce there given the other information the market's given us? Probably not. So it looks more like a situation that, although it is holding the 50%, and again, on a fast enough time frame, you'll probably find a scalp there. But I'm more anticipating this to pull back a little bit further. And if we can line them up, look at 786 and the rising wedge support, creating a nice zone of interest there at around 372.5. So definitely something I want to keep my eyes on there as well. Now, of course, same thing as soybeans. The big blow-off move to the upside will be a level of support at 369.2, but something to keep your eyes on there as well. But definitely not bad in terms of overall upward movement. It's just a matter of, can it stick the landing and keep going, or are they going to have a little bit of a hard time? And that's kind of the question we need to ask. Now, are there any other markets that you want me to cover for you? Got probably about up to 20 minutes or so left-ish that we can cover pretty much anything you want, whether it's stocks, crypto, futures, you name it, we'll cover it. No, I had another, someone else wanted me to go over, let me see, where did that email go? There it is. Wanted me to cover Tesla on this pullback and maybe take a look at Twitter. Yeah, so looking at Tesla and Twitter next. While I'm waiting for everybody else to type in stuff. Let me connect to the end of day data here for Kinetic, and then we can just pull it up in NinjaTrader. Make my life a lot easier. TSLA. Get a daily chart rocking and rolling here. We'll do the 60-minute anchor charts. All right. Let's see if we can load up a little more than this. 365. 3,000. Sure. I just need enough to work with here. There we go. All right. So with Tesla on this pullback, obviously there are some concerns. It's a heavy pullback. But the one thing that I'm looking at is I'm a big fan of looking at buying at cheap prices, right? I hate paying full price for stuff. I can't help it. It's the trader in me, it's the Dutch in me, whatever you want to call it. I'm cheap. I can't help it. So whenever I can find something that is giving me a cheaper alternative to get in, well, then I'm looking at a potentially heavier pullback. And if we look at the top here, let me put the bar in price. The top was put in at 389.61. I was like looking at percentage pullbacks, right? So 389.61 minus 25%, right? 25% gives us 292.20. We'll just say 21. So 292.21. So let's look at what happened there, right? Let's see if the market is paying attention to these pullback areas first. So 292.21. Obviously, the market's paying attention to these areas. Now, 25%, 50%, 75%, those quarter increments do tend to find some information, or at least some interest there. One other one, especially in a really strong rally up, is 10%. 389.61 minus 10% gives you 350.65. So 350. 350.65 is a 10% pullback off of the highs. Didn't actually act as much support. Really acted more as resistance. So a lot of buyers, what that tells me is a lot of buyers probably bought it, realized, oh crap, I bought the wrong place and they need to get out. Because now they're holding 25%. So a 25% pullback to 292.21 is holding really nicely. What's the next one? Well, the next one is going to be, 50%, right? Going in quarters. Now, don't forget, along the way, you also have the possibility of looking at something like, 33% going in thirds, that kind of thing. I'm going to set the beginning to 0 just so we can see the full pullback amounts here. So we'll go down to 0. We'll add in some common ones here. So obviously 25% is going to be a big one. And we want to see that visible. Right there, there's your 25%. So that's holding nicely. Along with that, though, we want to add a couple other ones, right? 33%. Let's take a look at that. 33%. We already have a 61.8, pretty much 66, if you're going in thirds, so that should be all right as well. But right now, we're sitting on top of 33%. We're a third pullback off of the highs. So, what I really kind of question when I'm looking at stocks in general, especially when it's been on such a strong tear to the upside, I mean, this is certainly no joke for the bulls. When they're pulling 33% off, that's where I start looking at the fundamentals, right? Is there any really bad news, or are they just getting unfairly punished because the rest of the NASDAQ is getting hit as well? You're getting a lot of big stocks like Facebook. Obviously, there's some fundamental issues with Facebook, but, Twitter and some of these other ones, is this just sympathy with it coming down with the other ones, or is there actually something wrong? So to me, sitting on top of a third pullback, this is where I start looking at it thinking, okay, well, I might want to start picking away at it. Not going full bore and dropping, 1,000 shares on it, but just looking at it saying, hey, we're a third back. And if I'm buying in thirds, you've got the third. I mean, you could do half as well, but 2/3 and then all the way back, which is 0, which is probably not going to happen. So you're looking at these moves with a base point of $0. And the high is currently, up at the top there at 389.61. So I start looking at these areas thinking, man, this is a nice sale. This might just be the beginning of the sale and it might drop another 60%, but this is a pretty good sale price right now. So with Tesla, 261.04 is definitely an area of interest. And you can see buyers are supporting it. But again, just a fib level by itself is not good enough. We need to stack these things up. Let's draw this line backward a little bit and see if this lines up with anything. And sure enough, we have a swing high, breakout attempt, and swing high, swing lows, swing high, swing high. You get the idea. So it's no wonder that there's a good amount of support coming in here, because this is a really strong horizontal support. So not only is it a 1/3 pullback, you're getting a 33% off sale, but you're also on top of major support. So, over the long run, I think this is potentially a really nice sale price. Now, don't get me wrong, if it falls farther, I would love to pick up 50% back down at around $200. Yeah, you better believe I'm going to be a big fan of that. If I can get it even cheaper than that, I'm going to be a big fan there too. But this might, like I said, this might just be the beginning of the sale prices and it drops another 70%. You have to be prepared for that kind of thing if you're going to be building into a position long term like that. But this is an area of interest for sure. And the fact that it's stacking up for you shorter term traders, it's stacking up in a major area of support, there's a good likelihood that you can get a couple % bounce off of that. So it's definitely in an area of interest, yeah. And Twitter was the other one. Twitter had a little bit of a different kind of flow to it because they had that big breakaway gap to the upside. And it just kind of got stuck. Now, I talked about Twitter on the... Actually, I think on Twitter. I think I posted the chart on Twitter. But it was talking about the highs and lows of this candle area and how they can become a very large area of interest. Because a lot of times with that big gap up, huge bear bar, and then it doesn't break out of it, that creates a level of support and resistance above to see if they can break out above the highs. If not, maybe they break below the lows. This is where they start trying to ride the struggle bus. And you can see they broke above it, failed, tried breaking down, big breakout to the upside. Nope, just kidding, all the way back down again. We're probably looking at a similar situation. So what I like to do in these cases is mark these areas up, right? Mark that big bull bar up, and then measure. How far did they get above this, right? If I measure from the top up to here, I can now take this box and use this as a measurement tool, right? And look at where we're finding support. It's an equidistant breakout. They broke out above the highs by, X distance, and now they're breaking below the lows at X distance once again. So it's a similar breakout move, and it found some nice support. Now, it also lines up with a moving average, and it also lines up with a retest of that previous swing high before the breakout. So once again, stacking things in your favor. But that's something that looks really nice. Now, is this the bottom? To be honest, I think Twitter is getting unfairly punished. It's getting dragged down by Facebook. Facebook has a lot of fundamental crap going on, and I think everyone's thinking, well, Facebook's getting smashed. Maybe Twitter will too. So it's kind of like a sympathy fall. I don't think there's anything wrong with Twitter. And as a stock, fundamentally speaking, it's at a fair price. I don't see any problems with it. So I think this might be an opportunity to pick it up when it's nice and cheap. Now, that said, it's been cheap for a while because it put in a huge high way over here back towards $80. But, that said, this looks like it's trying to catch a nice reversal off the bottom, and this is a really good start to it. So, for me, I look at something like this with a similar aspect and saying, okay, well, I know that the top from here at least, all right, park that on the top there. Get this over here, set this to 0. Right, we'll get those same levels on there looking at the $0 mark and to that rally up. This is definitely going to be an area of interest at 33. Where is it? 33, thank you. And then we'll also add 25 on there just to see what that's all about. But guess what, right? 25% is stacking up in the exact same place we were just talking about. So not only do you have a 25% pullback from 0 after this move up, but you're also in a situation that it's lining up with the previous structured area of support. You have moving average support, and you have an equidistant break-off support. I can't argue with that, right? That is definitely an area of interest. Now, this isn't really my preferred way to measure this up. I still prefer to go to the all-time highs myself, but it is something that you can do, When I look at this 0 all the way up to the highs, obviously we've gone way past 25%, 33%. All of those are just done and gone. But we are still holding the 786, right? So looking at some of these levels of support, 786, we'll leave that on there. Need those, get rid of that. Right there, right? Look at where this support is coming from. From 0 all the way up to the high, it's pulled back 78%. And look how long it's been holding this area, right? Since October, mid-October, held it. It made a good runaway here back in July. Then it came back and held it some more and held it some more. So obviously there is buyers here. They're accumulating. Why would they be accumulating? Well, it's 80% off. It's cheap. So, again, I think Twitter is unfairly being kind of sucked back with some of the other markets because it's putting in a pretty good fundamental argument of why we should be rallying higher. It's at a really good cheap price. It's held the 786 for a very long period of time and did not let loose. And it kind of stood the test of time. It held that up and rallied up. Now we're sitting at almost twice that price. I mean, keep in mind, it put in a low, roughly at least, of around $14. $14. It's sitting at 30. So it's already gone 100% up from there. And I'm sure a lot of people want to take profit. So, I think a lot of people... And not only is it a sympathy push down, kind of following along with some of the other tech sectors like Facebook and Amazon and some of those, but you also have a situation where a lot of people bought in when it was at $15-16 and they're sitting up 100% in their position. Do you blame them for taking profit? I don't think I could blame anybody when you're up 100%. It doesn't make any sense. So, for me, that just looks like it's a solid company. It got really cheap. Buyers accumulated it over the course of, a year. And now we're seeing that rally to the upside with those buyers letting off. They're going to take profit along the way, but I do not think this is the end of the rally up on Twitter. It wouldn't be a surprise at all going into the end of the year to see Twitter back up here around 50s, maybe even a little higher up to 60s. Some of these other areas of support or resistance. It's putting in a really nice rounded bottom, and as long as nothing fundamentally changes, they don't do something stupid like Facebook, it should be all right. So I like Twitter. This pullback I think is a nice cheap zone of interest. Might get a little bit cheaper, but at the same token, you know, I don't necessarily mind it around this area. It would be nice if you had gotten in at around 15, but you know, hey, not everybody has that crystal ball. Pretty obvious to see in hindsight, of course, but not too bad. So again, we got about 12 minutes or so. Feel free to type in any markets you want me to cover, and we'll go over that. And if nothing comes in, then so be it. We'll wrap it up. But the plan is, just so you guys know, the plan is I'm going to be doing this every day. I just wanted to schedule the first one to get it on people's minds, get it in the calendar book, etc. But I do plan on doing this every day, except Friday. But doing it every day, just like I would normally with the market outlook video that I do at night, this is going to be replacing that, so you have a little bit more of a live environment. We can kind of interact with one another. You guys can ask questions and all that fun stuff. So make sure to tune in every day. Is it going to be an hour every single time? Probably not, realistically, but at the same time, it might be. You know, might go a little bit longer, and it might go a little bit off topic. That's the fun thing about when things are live, but that's what I'm looking to do. A little bit more community involvement, if you will. Get a little caffeine in my system here. Working on that G Fuel sponsorship. Not seeing any other requests coming in for the markets, which is totally fine. So that's really going to do it. You know, I think the big thing that I'm looking for going into tomorrow's price action is, you know, looking for the S&P to continue its bear descent to the downside, watching crude in this pretty big area of interest. I mean, we have the 200-period moving average coming into play, possibility of a channel low. We have a more major support below at 62.62. Lots of things of interest here to be keeping an eye on. Over on the euro, it's really failing off of those lows, having a hard time. I can't say that I'm too impressed by this low push, so the euro might get a little bit bullish here, but for right now, looking for the bears to at least try to continue down to a new low. They did arguably get that. Just a matter of how they close this candle in the next 10 minutes or so. And then for gold, looking for a pullback in the overnight session and continuation up. So that's going to do it for this one. Hopefully you guys enjoyed the more live view. Again, this is my first time doing it, so there were a couple bugs here and there. Bad audio with a double microphone, but got it all figured out. Aside from that, though, as always, make sure that you don't miss these by clicking subscribe underneath the video, so you can subscribe. You can also click the little alert notification. Looks like a little bell icon. That way you'll always be notified every time we go live, and we will be doing it every day at around 1 o'clock, doing some chart analysis. So that's going to do it for this one. As always, like we always say, doesn't matter what market you're trading, always make a plan, trade the plan, follow those rules, and you'll be okay. Until the next time, we'll see y'all then.